So let's just start. Welcome to this APM revision marathon session. This is Luqman Rafiq here, the tutor for the course APM. This marathon session of today, what is going to be my agenda? Let me just give you a bit of a guidance. I shall inshallah be going through the different type of practice questions on the APM. But before I go through those questions, what I would do is that I would be doing the revision of the different topics that have been examined in those areas. Now, uh, there are specific areas which I am actually going to be covering. I won't be covering the whole of the syllabus, but I would be covering a significant number of areas. And I believe that at the end of the session today, you will inshallah be in a position that you will be able to handle APM questions well. You will have an idea that how an APM question needs to be dealt with. So that is what is actually the agenda. And plus, at the end of the session, what I would try to do is that I would try to actually open up the floor for every one of you, so that what you could do is that you could ask as many questions as you would like to ask from the APM, and I would try to answer you all of the questions. So that's what we are actually going to do at the end of the session today. So hopefully, inshallah, we will have a good session. We would probably be taking 2 breaks, and we would be actually covering up the whole session with the 2 breaks. The recordings for this course, because a lot of students, they ask that where are we going to get the recordings? So the recordings for this course would be made available to you by tomorrow. Plus, would there be a WhatsApp group? Yes, there is going to be a WhatsApp group. If you have registered for the class, you would have actually shared your contact details with us. Our team is going to add you up into the relevant WhatsApp group. And we are going to be actually finalizing, we're going to be adding you all. So you will get the recordings, but just try to be live, and I'm sure that you people would enjoy it. There are a few people amongst you people here who have actually attended the previous sessions that I've conducted for the different subjects over the past 3 days. It has also been very tiring for me that I've been conducting the sessions for AFM, AAA, SBR. So those who have actually attended, has any one of you attended any of the sessions from the other subjects that I just conducted in the previous 3 days? Anyone? Okay, so Tarsana, yes, you attended AFMS. Stanley, yes, you attended. Okay, so you would have actually known this thing, that when I'm conducting those classes, I'm actually giving an open platform to all to have a discussion, and that's what I'm going to do today, inshallah, also. But again, my focus is going to be to do maximum practice questions, because I think that that's the most important areas. So those who have attended would realize the value of those one-to-one conversation that I do at the end of the session, and you will love it, inshallah. So anyways, okay. So I'm actually gonna start off with this March-June 2000 uh, March-June 2018 examination question. Let's have a bit of a discussion about this March-June 2018 examination paper, that what exactly is this paper all about? What are the areas that this paper is actually covering? So the first question that I am actually going to do is pertaining to question number 1, and that is actually about the Chivan stores. It's actually about the Chivan stores. That's the question that I will be covering. Now, let me just guide you that how exactly are you going to deal with such big scenarios of the exam. So always try to remember that you got to deal it step by step, step by step. That's what you got to deal with it. Now, how do we actually go about it? Let's see. So it says Shivan Stores is a listed clothing retailer in Beeland. Its overall aim is to become the largest clothing retailer in Beeland and deliver exceptional value to its shareholders. So what is actually happening is Shivan Stores is a listed company in Beeland, and its aim is to become the largest clothing retailer in Beeland and deliver exceptional value to its shareholders. It has recently dropped down the clothing retailer rankings from 4th to 5th. So their rankings have actually dropped down. The shareholders have expressed concern at the lack of dividend growth at a time when spending in the Beeland clothing market has been growing. So now what happens is that the customer spending is increasing, but the company is struggling to generate profits. And that struggle to generate profit is actually uh, the struggle to generate the profits is actually preventing them from paying out the dividend. So we have actually uh, gone through this first specific part of the first paragraph of the question, where we know that it's a clothing retailer. It has actually entered, I mean, like it has dropped down its rankings and it has been unable to pay out the dividends. That's something that's happening. Now, then what else I'm going to do is that I'm going to go on to the requirements of the question and would try to see that what are the requirements of the question. So I missed out. They were on the first page of the question, and the requirement of the questions are, it says, write a report to the board of directors of Shivan 2. What is it that you got to do? You got to write a report. What is it that you're going to do? You got to write a report. So I'm going to guide you how do you write a report to the board of Shivan 2. Evaluate the performance report in Appendix 1 as requested. Then it says using the data in Appendix 1, recommend with appropriate calculation and justification 3 new performance measures for Shivan as requested. So you've got 20 mark, which is about evaluating the performance report. You have got 8 marks, uh, which is about recommending the 3 new performance measures. Then it says advise on appropriate performance measures and systems for Shivan when using the value chain approach to simplify the supply chain. And lastly, discuss the developments of big data and its potential impact on Shivan's information system, including the risk and challenges it presents. So that's how things are. Now let's have a bit of a discussion. Let's just try to discuss things. Let's just try to see what exactly are this all about. Now, first thing is that we have to write a report. Now, how exactly are you going to be writing down the report? So we are going to discuss that. I would suggest you one thing, that when you are going to be attempting the answer in the examination also, you just copy down the relevant requirements. You just copy down the relevant requirements. And when you're going to copy down the relevant requirements, how would you do? You would say that to, from, whom are you writing the report? You're writing a report to the board of Shivan Company. To the board of Shivan Company. Whom are you writing the report? You're writing the report to board of Shivan Company. Okay. Is my screen black? Are you people struggling to see my screen? Or is it just with one of the students? Or is it with everyone? Okay, thank you. Okay, basically what happens is that when you are actually writing down a report, it has to be like this: to the board of Shivan Company from. Who are you in this scenario? So is there any there it's mentioned? Let's just have a quick. Okay, has he mentioned somewhere that who are you? Apparently, I cannot find it, so I'm just gonna leave it here. I'm just gonna leave it here, and then I would say the subject, which is basically um, performance report and management issues. Then I'm gonna write down the date. The date is gonna be your exam date. Probably, let's say it's gonna be the 8th of June 2022. So that's how you do write down the starter of the report. Then what happens is that you have to actually write down an introduction paragraph. And what do you need to do? You need to say that this report evaluates the performance report, the performance report and recommends with appropriate calculation and justification through new measures for Shivan. The report further advises on appropriate performance measures and systems for Shivan when using value chain approach to simplify the supply chain. In the end, the development of big data and its potential impacts on Shivan company system, including the risk and challenges it presents, are being discussed. Do you get it now? Do you get it now? Now what next is there? So it's actually to the board of Shivan company, and you got to write down an introduction. You got to write down an introduction. And with respect to this introduction, you have to actually reword all of the you have to reword all of the requirements, and rewording of the requirements would actually lead you towards a situation where you are able to actually tell them that look, this is what this report is going to be covering. So that was the first part, which was write a report to the board of Shivan company. That's what I've done. Now the second part of the question is, it says evaluate the performance report. Now what exactly are you going to do with respect to evaluation of the performance report? Let me just guide you. First of all, there is a word which is called evaluate, and then there is a word which is called performance report. Now, how exactly do we go about generally evaluating the performance report or things like that? So let me just give you a bit of a guidance. Whenever we talk about the evaluation means to discuss. To evaluate means to discuss. Now to discuss means you got to talk about both the aspects, which is you got to discuss the pros and you got to discuss the cons, both. You got to discuss both aspects, which is the pros and the cons. Just okay, so when we talk about the evaluation, the concept of evaluation is that you got to discuss. And when we talk about discussing, it's about you discuss the pros and you discuss the cons. That's what you do. That's what the discussion is all about. Now, what next is there? The next situation is it says performance report. Now, let me just guide you. Basically, what do you mean by performance report? So the performance report generally shows your performance and it is being presented to the BOD. The performance report actually shows the entity's performance and it is generally presented to the board of directors. Now, when we talk about the performance report being presented to the board of directors, what are we going to be doing? What are we going to be seeing? Let's just try to see. So basically, when we present a report to the board of directors, you got to make sure that the report that you submit to the board of directors should actually cover up some specific things, should actually be with a purpose, should actually be with an objective. Now, what are the things that you should keep in mind with respect to performance report? So I would ask you people to remember a mnemonic, which is basically PAIL. The PAIL, this is a mnemonic. Now, where do I get this mnemonic from? I get this mnemonic from the ACCA previous articles. So one of the articles from the ACCA, it discusses about this PAIL. Now, what is this PAIL all about? This PAIL actually means purpose. This A means audience. This I means information. The So you've got the purpose, you've got the audience, you've got the information, and this L actually means the layout. This L actually means the layout. Now let's have a discussion about it, that what exactly are you gonna do? See, when we talk about the board of directors of any entity, when we talk about the board of directors of any entity, so having a discussion about the board of directors, what are they interested in? The board of directors are majorly interested in ensuring that the organization is accomplishing its mission or not. The major thing that the board of directors actually look for is that whether the organization is accomplishing its mission or not. That's what the board of directors actually look at. So the mission of the organization is usually given in the mission statement. So what happens is that the performance report, the KPIs that are covered up, the information that the performance report provides, it should be aligned with the mission of the organization. So whatever your organization's mission is, it should be aligned with that. Like in this case, if I talk about this Shivan company, it says its purpose is to become the largest clothing retailer and deliver exceptional value. So you got to make sure that the report actually covers these two aspects of the mission, which is basically that it wants to be the clothing retailer, and then the second aspect is that exceptional value to the shareholders. The second aspect is that exceptional value to the shareholders. So basically what happens is that when we talk about it, you got to understand few things. What are the things that you got to understand? That the first thing is that if you are gonna be preparing this, I repeat, if you are gonna be preparing this, so you got to make sure that you have actually defined the purpose for the organization. You have your information should actually have the purpose of the organization. Now, what exactly do you mean by audience? So when we talk about the concept of audience, the concept of audience is basically the report that is being prepared should actually be such that, I repeat, the report that is being prepared should actually be such that it is targeting the appropriate audience. Now see, what do you mean by it is targeting the appropriate audience? So let's have a bit of a discussion about it, that what exactly is this targeting the appropriate audience? Let's have a discussion. Just wait a Now, when we talk about the concept of this audience, so what exactly do you mean by the audience? Let's try to understand this concept of audience. So basically, when we discuss about the concept of having an audience, so you got to understand that whom are you actually submitting the report to. So generally speaking, when we talk about any organization, there are usually three levels within the organization. What are those three levels? One of them is a strategic level. The other one of them is tactical level. And the third one of them is the operational level. So one of them is a strategic level. The other one of them is a tactical level. And the third one of them is the operational level. Strategic level management is like the ones who are looking for the larger picture, the greater picture. So they want a very much summarized info. The tactical level, they need more details. And the operational level people, they need a very detailed picture. I mean, the operational level people, they need a very, very detailed picture. So now, if I could just give you a bit of a guidance that to what extent the strategic level management would be looking at the picture, to what extent tactical level, to what extent operational level, I could just give you a bit of an idea. See, take an example of a balance sheet of an entity. If we talk about balance sheet of an entity, so generally what would happen is that you have got these non-current assets where you've got the PPE, where you've got the intangibles, etc., etc. Then you have got the investment property. So this is one way of looking at the balance sheet. Now, a slightly detailed picture is like this. You've got the non-current asset, and then you have got PPE, and then when you have got the PPE, you have got the land, you have got the building, you have got the vehicle, you have got the land and building, etc., etc. Now, there is another type of detailed information that could be provided. When you talk about PPE, it's actually having a land property number 326, property number 72A, property number A45, etc., etc., etc. Now see, this is the type of information that the strategic level management is looking at. This is the type of information that the tactical or the middle level management is looking at. And this is the type of information that the operational level management is looking at. You get all these points. You get all these points. So these are the different type of informations that these managements are looking at. So what you have to do is that you got to keep in mind the type of audience that you are presenting the information to. I mean the type of audience that you are presenting the information to. So if your audience is like this, like if it's a strategic level audience, you are presenting this type of information. If the audience is like this, tactical level, you're presenting this details. Then if there is an operational level, you are going into the minutest of the details. Do you people get it now? Yeah, do you people get it now? Okay, lovely. So basically what happens is that when we talk about the audience, when we talk about the audience, the concept of audience is actually like this. When we talk about the concept of audience, the concept of audience is actually like this, that you got to keep in mind that whom are you presenting the report. So the performance management, performance evaluation reports are generally submitted to the strategic level management. They're generally submitted to the strategic level management. Now, if they are submitted to the strategic level management, so they should not be very detailed. They should not be giving a lot of detail. They should actually be covering a broader summary picture, important picture, important details, important information, should not be getting into the minutest of information. right? Now, the third one of them is basically, the third one of them is basically when we actually talk about the concept of information. Now, see, what happens is that if you are giving information to your management, that information should actually, I repeat, that information should actually be like this, that it should actually have got multiple dimensions, it should have multiple aspects. Now, what do you mean by the information having multiple dimensions, multiple aspects? So for that, you got to understand. I repeat, if I talk about your information having multiple aspects, this means there should be financial information, there should be non-financial information, there should be internal information, there should be external information. The information should not be such that, I repeat, the information should not be such that it is a single dimensional. You got to give an all-rounded picture. That's what you should try to do. Give a financial detail, give non-financial detail. That's what your objective should be. Then we have got the layout. The layout is actually presentation. The layout is the presentation. See, when we prepare financial statement, if I write down sales like this, 43957271. Now, well, yes, thank you. The information, everything should be connected with a purpose. For let's say if I say sales is this, you would say that, look, what is this? What the hell are you giving to me? How am I going to interpret that? What is it written? You would say, okay, I'll just improve it. I'll write down this 43957271. You would like, I have improved it. Now you can read it 439 million. 439,572,731. Okay. Now, the senior level management would say that, look, my friend, uh, just round it off. You'd say, okay, 439,572,000 or 573,000. Again, they would say that, what are you up to? What do you think that we are going to just read that number of times that the zeros or the commas are being given? What are you expecting from us? Do we have so much time? The best way to present to them would be 439 million. Would be 439 million. You see, the best way to present to them would be 439 million. So 439 million. That's one of the ways. Okay, so basically this is what it is going to be, 439 million. Now, so that's one way. Now you see the presentation, it's readable. The senior level management would say, okay, yes, it's making sense to us. It's actually giving us a picture. It's actually making sense. Now, what are you going to happen is that you got to make sure that when you present, it's readable. The numbers are readable. The numbers are legible. Plus, you can actually give uh, pie charts. You can give bar charts. You can actually give the trend lines, things like that, etc. So basically, layout is the design, is the way it's being presented, is the way it's being shown. So you got to make sure that the layout that you adopt, you got to make sure the reflection, the presentation should be, the presentation should be such that the presentation should be such that it is making sense, and it's actually giving an easier information to be interpreted by people. Do people get it? Okay, lovely. So I have actually explained to people that in case if you are to require, if you are required to evaluate the performance report, how exactly are you going to be evaluating the report? So I've actually explained to people how the report is going to be evaluated. Now, let's move a bit forward. That's one of the requirements of the question. We're going to discuss that. Now it says using data in Appendix 1, recommend with appropriate calculation and justification 3 new performance measures for Shivan as requested. So when we'll read the question, that part, we'll do that. Then there is this value chain, then there is this big data. I'm not getting on to that right now. I'm just going to read out the relevant part and then I'm going to move forward. So what does it say? It says that there has been recent change of chief executive officer. Okay. And the new CEO has identified that performance reporting at Shivan is not fit for the needs of the business. So the new chief executive thinks that the reporting is not appropriate. It's a very vague type of reporting. It's a very inappropriate type of reporting. Now, what else is there? It says she has asked you to prepare a report to the board to address the performance measurement and management issues, which she sees as most important. Her plan is to achieve the overall aim by maximizing our opportunities from new technology and increasing our currently small web presence. So she wanna actually be focused on technology. She wanna enhance the web presence. That is something that she wants to do. She wants a detailed evaluation of the current performance report, which is used by board for its annual review of business. She wants this task split into 2 parts. Now, see, the questions requirement were not that clearly explained, but the details in the question, the discussion in the question is actually explaining to you what the CEO wants. First, evaluate the existing set of measures. So what is he asking us to do? My suggestion of using the pale is there, but again, that information in addition to this, whatever he's saying here, you got to follow that. Evaluate the existing set of measures and their presentation. The existing set of measures, that are those measures appropriate? Are those in line with the organization's performance reporting? Are those in line with the objectives? Are those sufficient, etc.? And then second, add 3 new measures which you believe address key issues for the business, but are not currently on the report. She has stated board does not need a commentary as she and the finance director talk through the report in detail with the board. Now, what does he mean? He means to say, don't tell me that sales is increasing. Don't tell me that COGS is increasing by this percent, sale is increasing by, you don't have to. All that you have to do is that you just have to make sure, I repeat, you don't have to do that. All that you have to do is that you just have to make sure that you talk about the report's contents. Don't talk about performance. We don't want performance evaluation. We want evaluation of the report. That's what he's suggesting to you. Now, before I move forward, I'm actually going to take you people to the report. You people already have got the questions. I've shared them with you on the WhatsApp. I'm going to zoom out this full report. I will allow you 5 minutes to go through the report and try to see what you can do. Try to see what best you can do for this. Let's resume. Now let's just see. If I could just read through the remaining part of the question and all that. Um, it says, um, in fact, what I would just do is that the overall aim is to become the largest clothing retailer and deliver exceptional value to shareholders. That's one thing. Now, overall aim is to become clothing retailer in Beeline and deliver exceptional value to shareholders. Why am I writing down these things? I'll just tell you. Plus, she has asked you to prepare a report. Her plan is to achieve the overall aim by maximizing our opportunities from new technology and increasing our currently small web presence. Okay. In additional effort to drive improvement and gain competitive advantage for Shivan, the board had decided to use value chain as a business integration tool. So they want to use value chain as business integration tool. Gain competitive advantage. CEO has provided a copy of the value chain diagram, which was discussed at the last board meeting. She believes that further improvements in Shivan's performance can be achieved through simplification of the supply chain. Simplification of supply chain. CEO believes this has implication for performance measurement information system and wants a report to address. Finally, CEO has already identified one important reason, and that is failure to make use of big data in relation to web sales. She believes that board does not understand implications of the volume, velocity, and variety of this data for the business and wants you to write a guide for them. She is aware that this is a new and rapidly developing area for most businesses. She considers that the board should also brief about risk and challenges. She wants a report which she can present to the board to address these performance issues at Shivan. Now, if I could just say, these are the things that are actually there with respect to the objectives and aims of this organization. Now, it says we've got revenue of clothing, men's, women's, children. Region A, region B, region C. Then there's this total revenue given 2017-18. So that total for 18 is given, total for 17 is given. Okay. The other is basically 19, 32, this, and this. Now, I just want to actually read through some of the things, and I just want to say that is it a good one, or I want to discuss each and every area of the report. So I want your comments on how the revenue is being presented, because what I'm just going to do is that I'm going to list down the comment and then I'm going to give a conclusion to all of them. So from me, the comment for this is that you could say revenue for each type of products and the gender/age group provided. Total revenue for the previous period available. Revenue for each of the region is available. Okay. When we talk about operating profit margin, I'm not commenting anything if it is good, if it is bad, etc., etc. Detailed operating profit margin for each product, gender, age group provided. number of stores discussed, EPS, dividend per share, EVA, market share discussed, number of employees, number of suppliers, number of accidents, these are all discussed. Inventory, write downs, etc. etc. Now, before I go on commenting, I would actually say that I've just identified what are the things that are discussed. Now, what I would do is that I would just say that I need to connect them to the objectives of the organization. I got to connect them to the objectives of the organization. Now, how would we do it? Let's say the overall aims are to become largest clothing retailer in B land. So what are you gonna do? You're gonna say that the sales growth, comparison of sales from previous period and also the market share are measuring this to an extent. However, the share of the largest retailer not reflected in the report. Now, let me just give a pause and let me just explain to you. I am the Chief Executive Officer of the organization, and my organization's objective is that I want to be the largest clothing retailer in B-Land. My team submits me a report, and in that report, my team tells me that, look, sir, this is what the revenue was in the previous year. This is what the revenue was in the current year. And this is what our market share is right now. This is what market share was last year. Okay. I said, okay, this is good enough. You have given me a bit of an idea about my market share. You have given me a bit of an idea about my market position. But again, I am not able to get a proper idea about my market position. I don't know. I actually don't know that where do I stand amongst the competitors. I don't know if I'm the largest. I don't know that how many people are there above me. So this is reflecting things, but this is not reflecting 100% of what I'm looking at. Right? Do you get it? Now, it says deliver exceptional value to the shareholders. So what actually happens is that the different type of performance measures like EPS, DPS, EVA are the measure of shareholder wealth creation / distribution of the profit. To evaluate if the exceptional value is created for the shareholders, a detailed evaluation is needed. So basically this earning per share, this dividend per share, the economic value added, they are the measures of shareholder wealth creation, distribution of profit. So to calculate if the exceptional value is created for shareholders, a detailed evaluation is needed. But again, this is something which is good. It is something that is actually good. A better approach would have been to compare it with the industry averages to get a better idea. I have not written down the answer. I'm just trying to tell you that how do you compile the points. I'm trying to tell you that how do you actually gather the points. That's what I'm trying to tell you through this. I have not written down. This is not how I'm going to write down the whole answer in the exam, but I'm right now just compiling and telling you that how things are to be aggregated together. Now, what else is there? The subsidiary aims of the organization include maximizing our opportunities from new technology, increasing our currently small web presence, drive improvement and gain competitive advantage, use value chain as an integration tool for the simplification of the value chain, so and so, so and so. Now, so what you would do is that you would say that maximizing opportunities from the use of new technology. Is there any discussion of any use of the technology in the report? Any expenditure on technology, any R&D, anything? So you could simply say that no discussion or measures / information available for the use of new technology. So that is what you are going to be actually talking about here. Then the number of stores in the last year and in the current year have been discussed, but no details are available. Okay, yes, Aditya, just wait a bit. You don't have to suggest the measure side by side. Just wait a bit. There is another requirement right now. Or you could just talk about some of the measures also, or you could talk about some other information. Increasing our website number of stores in the last year and the current year have been discussed, but no details are available about the sales made through website or through online platforms where goods are being sold. So you see, rather than just suggesting the measure, I've actually just said that this seems to be the missing information that I could not see. No discussion measures information available for the use of technology. Now, Are there any things for the supply chains? Number of accident in stores, average queuing time for customers, average time between customer employee. This is not something. Inventory obsolescence and lost. I mean, apparently, the impact of how use of supply chain has impacted the performance is not covered. No details about the supplier relationship or increase in the business's value using the suppliers, etc. Now, the external information is also not available, suggesting that any use of big data is being made. Now, you see, when I'm actually going to be writing down the answer, so in general, this is what I'm actually going to be doing. I bet this is in general what I'm going to be doing. Now, in fact, this is specifically about the entity that I've actually discussed. Now I'm going to talk in general. Subsidiary, I mean, like there's always a major mission and then you have got attached objectives to that. Now, how am I going to write down this answer now? This is important to be discussed. So basically, my pointers have been here. I would say that in order to evaluate the performance report, it is important to consider that the report should be prepared in line with the it is important to consider that the report should be prepared in line with the aims and objectives of the organization, as the major user for the report is the CEO and the board of directors. The major aims that organizations that Shivan Stores is trying to achieve and the extent to which they have been covered in the report is discussed below. The objective of becoming the largest clother in B-land is measured to an extent by the comparison of sales from previous period by the comparison of current period sales from the previous period sales, and also the market share suggest this objective to an extent. However, the share of the largest retailer not reflected in the report, which does not provide a clearer picture about the current standing of Shivin as compared to the competitors. Do you get it? How do we write it? You see, do you get it? How do I write it? How I have actually just gathered the points and how I have actually explained it in detail. Then you would say Shivin also aims to deliver exceptional value to its shareholders. The use of earning per share, dividend per share, and EVA measure the benefits and values created for the shareholders, but the measurement of the exceptional value created for the shareholders can only be established if these measures are compared with the industry averages. When the industry averages / competitor data. In addition to the main objectives, Shivin Stores also has subsidiary aims to so the subsidiary aims of this Shivin Stores are these. The performance report does not cover either of the above aspects, as there is no discussion / information measures for the use of new technology. Furthermore, The number of stores in the last year and in the current year have been discussed, but no details are available about sales made through website or through online presence where the goods are being sold. Hence, no coverage for the web presence. So this is how you're going to be talking about. Now, if you have covered up connection with the all of the objectives, the measures, the mission, etc., etc., then you would say the additional comments on the report are as under. The report includes only the financial performance, or you could say financial data, and the non-financial information is not discussed. Report is only internally focused and does not cover external information. Numbers are being presented, but no trends, growth percentages, to provide better presentation are but trends, growth percentages, etc. are not present, are not available. Are there any other additional comments that you can make? Are there any additional comments that you people can make? Okay. Yasin, I've covered this, that numbers are being presented, but trends, growth percentage to prevent better present. Okay. Furthermore, no use of any graphical presentations is available. So purpose, we have covered the audience. Now, let's talk about, I mean, like, do you think that you got to report these things to employee, these things to management, these things to management, these things to management? So the operational level information, like time taken to greet customers slash number of stores slash accidents, are being reported, which are usually not considered at the strategic level. We have talked about the information, it's all financial, 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 no non-financial information, no external information, all internal information. And we have talked about layout also. See if you can add up anything. Budget is not achieving information. I did not get it. Sorry, can you just repeat? Okay, so we have done this. Now, let's move a bit further. Okay, ROC percentage is also given. Okay, yes, thank you. Now you see, the variance analysis could have also improved understanding of the performance. Now let's come on to part B of the question. What was the part B of the question? Recommend with appropriate calculation. It says using the data. That means you don't have to bring the data from your home. You have to think about the data which is available in here, and you have to suggest the 3 new performance measures of Shivan as requested. Now, I'm giving you 3-4 minutes time. You have got the whole data. Can you just come up with more information? Can you come up with 3 performance measures for Shivan and justify that why are you using them? Remember that Shivan is actually a clothing retailer in B-land. You take 2-3 minutes, try to come up with 3 measures. Okay, Kishan Dixon, you have come up with few things. Now see what is actually here. Available here, we had the revenue, we had the operating profit margin. The number of stores are given. The EPS is given. Dividend per share is given. EVA is given. Inventory turnover days are given. Average number of product lines bought per supplier are given. Floor space is given. Market share given. Number of employees given. Number of suppliers given. Number of accidents, inventory obsolescence, etc. Now see, I actually want my stores to be, I mean, you see, we are Shivan stores. We want to create exceptional value for the shareholders. We want to be the largest retailer. Think about a retail industry. During the COVID times, a lot of companies, they shut down their stores. And why did they shut down their stores? They were like that. If there is a store, if you have opened up a store, so running a store, maintaining a store actually has a cost. Maybe it's a rented premises. You need to have systems in place. You need to have controls in place. You need to have employees in place. You need to have training. You need to keep a check on inventory. At times, there are 2 stores in the closed locations and both of them cannibalize the sale of each other. So you might actually get rid of one and let the other one remain. So a very important factor with respect to the retail industry could be the number of stores. Sorry, the revenue per store. So what you could do is that you could actually talk about this Shivan company. You could say that amongst the different measures, one of the measure is going to be revenue per store. And since we are being given information for 2 years, 17 and 18, so we're going to do it for both the years. 2018, 2017. Okay, that's actually number of stores, the total revenue. So I could probably just say that it's this divided by, sorry, this divided by this. Then what else is there? It says inventory turnover days. I could have actually talked about the working capital cycle, but it not much information available. Floor area. Now this is also important, which is floor area. Revenue per square meter. Then you have got number of employees revenue per employee okay. Average profitability per store, average profitability per employee. Yes, that could also be done. You could say operating profit, and there could actually be a measure of operating profit per store. What else is there? Christine, yes, I've used revenue per square meter. Then Sutar Sana, you're saying revenue from online purchases. Now see, Aditya, just wait a bit. Now Sutar Sana, you said that revenue from online purchases. The examiner mentions in his question that using the data given in the appendix 1. So basically that information is not available, so I'm not going to use it. Okay, Aditya, it says that recommend with appropriate calculation and justification 3 new measures for Shivan as requested. Then I can actually see that I've got suggestions from you people. Number of visitors visiting the website, again, information is not available. Operating profit is, we got it. Okay. Now, Aditya, did you get it? We have been given the operating profit percentage in 2018. So it was 16.5% multiplied by the revenue. It was again 16.5% multiplied by revenue. Just wait a bit. I'm converting it into million actually. Revenue per square meter. Revenue per employee is this divided by this. The operating profit per store is this divided by number of stores. Okay, now you see. Yeah, I've converted soap. I've converted the operating profit. Okay, now you see, what have I done? I've actually performed these calculations. There could be many other calculations that could be performed, but just make sure that you use the data which is available in the question. So it says use, and you need to suggest. Shivan Stores is a retailer and it is important from the perspective of any retail business to understand that it is important from the perspective of any retail business to understand that the revenue that they generate from each of the outlet and for each of the square meter of the area at which their outlets are constructed. So what does it say? It says Shivan Stores is a retailer and it's important from the perspective of any retail business to understand. Aditya, you could just do it in terms of percentages also, but how would you do it? I mean, like maybe you could just add up the ratio. Maybe you could say the change percentage, and the change percentage is going to be like this minus this divided by this. So you could just add up this also, right? Again, what happens is that is retailer is important from the perspective of any retail business to understand that revenue that they generate from each of the outlet and for each of the square meter at which their outlets are constructed. Furthermore, retail outlets needs staff and generating revenue per staff member is also an important measure. So based on above, use of revenue per store, revenue per square meter, and revenue per employee could be different measures that could help management make effective decisions about the company's performance. Again, you would realize this thing that I have actually not. I repeat, you would realize this thing that I have actually not discussed the performance of the entity. I repeat, I have not discussed the performance of the entity. All that I have done is I have just talked about I've not discussed I've just talked about the measure because he did not ask me to evaluate the performance. He just told me calculate the performance. He just told me that justify the measure. That's it. I don't need to calculate. I don't need to comment because they already know. Okay, is the voice breaking for everyone? Yes, the recordings would be available. So do you people get it? It's very, very important, very, very important that you answer what the examiner is asking you to answer. He has not asked you to comment on performance. He has not asked you to actually judge the performance of the entity. He has just told you suggest some measure and justify why have you suggested these measures. Yeah, are you people okay? Please be with me. Yeah, I need percentage increase. This would this be a measure? Okay, Aditya, what are you trying to measure? The way the business is expanding? Okay, is it what the entity wants to do right now to expand physically? Okay, the largest retailer does not mean that you have got the highest number of does not actually mean that you have got the highest number of stores. Okay, now are you all okay? Okay, so Tarsana again, you see, you people are missing out the main thing. You are not reporting to some operational manager. You're reporting to the chief executive officer. You are presenting to the board. You got to think from the perspective of board. Okay, Aditya, tell me, if you go to a supermarket, what do you see in a supermarket? What do you like about a supermarket? Okay, let me tell you. What we like about a supermarket is that supermarket should be spacious. What we like about supermarket is supermarket should have all the things that we would want, like the goods needed. Yeah, thank you, Ashraf. It's the ambience, it's the availability, it's the spaciousness plus the support. For example, let's think about a huge supermarket. You go into that supermarket and you're asking somebody, okay, can I get the milk of this brand? There's nobody to answer. There's somebody at the corner of the supermarket. Hey, hello, hello, hello. Can you just let me know if we have got this milk or not? So what is going to happen? You would ultimately be like, oh, hello, where am I? I'm into a supermarket where I am not getting the response. I would be rather better off being in a small superstore or a small store where I get one-to-one service. You get my point. Now, so basically the examiner, because you see, I think that there is a gap into your understanding of the question. What is the question asking? Question is asking that using the data, important, using the data. So the data which is available, recommend the calculations. Now, what calculation am I going to do? I need to think what is important for this supermarket. The business exists to generate profit. The business should be performing well. Now, no point in having a huge number of employees if you're not able to generate revenue from them. No point in having huge space if you are not able to generate revenue from it. No point in having number of stores if you're not able to generate revenue from them. So this is important for supermarket. It's important for retail industry. Okay, great. Now, is everyone okay? Shall I move forward? Okay. I get to see that others are not responding. Please be active. Please be attentive. Please be participative. Thank you. Are you people getting things or are you confused? Okay, lovely. Now, let me just move a bit forward. Let's try to discuss the next requirement of the question. It says advise on the appropriate. Yes, recordings will be shared. Advise on the appropriate performance measures and systems for Shivan when using value chain approach to simplify the supply chain. Now, let me just copy this requirement first before I go on to discuss further. Now, what does it say? It says in an additional effort to drive improvement and gain competitive advantage for Shivan, board has decided to use value chain as a business integration tool. I'm going to show you how it is used as a business integration tool. Chief executive has provided a copy of the value chain diagram, which was discussed at the last board meeting. She believes that further improvements in Shivan's performance can be achieved through simplification of the supply chain. So the supply chain is apparently complicated right now. They want simplification in the supply chain. CEO believes that this has implications for the performance measurement and information system at Shivan and wants your report to address this as well. Now, let's just see this. Here you go. This is what a value chain diagram is. Now, if I could just tell you people that what a value chain diagram is, try to understand. Under this value chain diagram, these activities are termed as primary activities. And these activities are the support activities. Now, so what does it mean? It means the actual business is being conducted here. This is where the action is. And when we talk about this margin, this is say value, this is the profit, this is the value creation, this is the efficiency, so on and so forth. Now, what do we mean by these primary activities? So when I talk about the inbound logistics, this inbound logistics actually mean your warehouse. It's basically storage of goods. It's basically receiving goods. That's what inbound logistics is. The second is operations. So you could think of operations from a normal manufacturing organization is operations is the area where the goods are produced. So it's actually or majorly your production department. It's majorly your production department. Then you've got outbound logistics. The outbound logistics is your distribution department. What is it? It's actually your distribution department. I repeat, it's your distribution department. The marketing and sales. So what have you got? Marketing actually means to create awareness. Sales is to actually have customers, and the service is after sales service. Then in addition to this, firm infrastructure is how organization as a whole is organized. HR is your human resource. Technology, the use of technology, the IT systems, etc., etc. The procurement is the purchase of goods. That's what procurement is. Now see, let's just try to understand. What does this value chain diagram tells you? The value chain diagram tells you that, look, this is the margin. This is the margin. This margin could increase like this, or this margin could shrink to this level also. Like you may actually be achieving only this margin. Or you may actually be achieving this whole margin. Now, how does it all happen? So value chain says that, look, your whole supply chain, every single aspect of your supply chain is connected to each other. You have got the suppliers delivering goods to you as an organization. Your warehouse department stores the good. Let's say they don't store the good properly. Let's say they don't sort out the goods properly. Let's say they don't pass on the goods on time to the manufacturing department. So ultimately what would happen is, if the value is lost at this point, it is actually going to be lost in the future also. The margins would reduce. It's just like you have got chain. Let's say if this part of the chain is weak, you drag the chain from here. Ultimately, this chain is gonna break from this point. This chain is gonna break from this point because there is one point where the chain is not strong. So your inbound logistic is not good. The whole operation, the whole outbound, the whole marketing, the whole service, they will end up doing nothing. They can do nothing. You've got an inbound logistics department. So when you've got an inbound logistics department, and let's say if it is performing well, but your manufacturing, it messes up big time. It messes up big time. Now what's going to happen? If it messes up big time, ultimately your inbound performing well, your outbound performing well can do nothing because the product is not up to the mark. The product is not good. So basically, every single aspect, every single department, every single function has to perform properly for the organization to be able to create value, to be able to generate margins, to be able to generate the efficiencies. That's what it is. Now, if I go back to this and if I see what the entity wants, advise on appropriate performance measures and systems for Shivan when using value chain approach to simplify the supply chain. Now, the examiner has given a very, very open scenario. Do you have any idea what to write down on this? They're trying to tell you that we know that the value chain tells you how the different parts of the organization are connected to each other. Right now, it says CEO has provided copy of this digital diagram. She believes that further improvements can be achieved through simplification of supply chain. So she wants supply chain to be simplified. And she believes that this has implications for the performance measurement and information systems at Shivan and wants your report. Now, can we just look at this and identify if there is anything related to value chain in here? Yeah, if there is anything related to value chain in here. In this data, is there anything related to value chain in here? Okay, anything related to supply chain in here? Okay, inventory, supplier, number of suppliers. Okay, now let me just have a correspondence with you people. Now, number of stores is no, dividend per share, no, inventory turnover. Inventory turnover, apparently no. Yes, it could actually have an impact if you want to bring about the efficiencies, like inventory turnover could be reduced by going on to the JIT, the just in time. Then average number of product lines bought per supplier. Floor space, that's another area. The number of suppliers is another area. Inventory obsolescence or write down is another area. Now, so from the whole of the scenario, what we could do is that we could just think about it like this, that the value chain suggests that each of the primary activities, that is inbound logistics, operations, outbound logistics, sales and marketing, and service are connected and dependent upon each other. These activities require support from the procurement, HR, IT, and need a proper firm infrastructure. So in case if any of the primary activities is not performing to its potential, or if the support activities are not supportive enough, this could lead to reduction in value / margin. To bring efficiencies, all aspects should perform well. Based on available information for Shivan, the interaction with a number of suppliers and accepting goods from them would be a cost incurring approach involving the inbound logistics and the procurement department. In case if the number of suppliers are reduced, the process of ordering goods is automated to an extent, and in case if the information technology is used for the acceptance of the supplies, the entity could end up saving a significant cost for the inbound logistics and procurement, and can also reduce the inventory obsolescence. The appropriate measures could be product lines per supplier, the number of orders received during the year, the reduction in the inventory obsolescence. All of these could be the different factors that could happen. Yeah, we are trying to simplify it using this value chain analysis, and we're trying to see that to what extent we could just reduce. The information systems would have to be adapted to connect the inventory levels and the purchase orders with the supplier systems, so that automatic orders could be placed of the desired quantities. Do you get it? So how could we actually bring about efficiencies for the supply chain? Based on available information, only the suppliers, the products, the inventory obsolescence, this was the area that we could think of. There could be many other things, but this is generally what we could think of. Okay, how is the new measure appropriate? Okay, it's basically when you increase the product lines per supplier, that means the number of suppliers have reduced. The number of orders received during the year. For example, you have got so many suppliers for so many things. Now, if you are placing an order to a supplier, the supplier could send 20 products in a single consignment. So you save the delivery cost. Plus, how could the inventory obsolescence could be reduced? Because when you would be connected to the supplier, when you would be ordering only what is needed, so this could actually help you. And when you would be having a strong relationship with the suppliers, this could help you reduce inventory obsolescence. Okay, let's move a bit forward and let's discuss further. There's this last part of the data, this question, which is discuss the development of big data and its potential impact on Shivin's information system, including the risk and challenges that it presents. Now, it's an 11-mark requirement. Before I go on discussing this big data, let me just give you a bit of an example that what a big data is. I might have actually, I mean, like some of you might have heard this type of example from me earlier, but I attended one of the training sessions in Sri Lanka. It was way back in 2012 or 13 when the big data and the concept were evolving. In fact, they were being developed at that time. So there was a trainer and he came from UK. He worked at BPP. So basically, let me just give you a bit of a guidance about it. Now, what he actually said was that he said, I'll explain to you what a big data is. How did he explain the big data? He explained the big data like this. He said that in UK, Tesco, um, a person came to Tesco's stores and he actually reprimanded the managers very badly. And he was like, how dare you send across a promotional message of pregnancy pills to my 15-year daughter? So ultimately what happened was Tesco, what it did was it actually, the managers apologized and all that, and they removed the contact information of the person from the from the uh, from the circulations and all that. And then the manager, he contacted that guy who was actually furious that how dare you people contact my 15, 16-year-old daughter. So they contacted that person and they said that, sir, we are sorry, we apologize for what you had to go through. Now we need to inform you that we have removed your daughter's information and that you won't be getting any circulations now. So the guy who was actually being contacted, he said that, I'm sorry about it. I did not know that my daughter is pregnant. I later realized that she is pregnant and that she wanted to get rid of that by using the pregnancy pills. Now, how would Tesco have got that information? Tesco would have actually captured that information from the different type of tools and analytics that actually use and that actually give the information to Tesco that uh, who is looking for what. Now, this big data was a science few years back, but it's relatively not a very difficult science nowadays. The major reason being that now these Google Analytics, the Facebook algorithms, etc., they are so much, I repeat, they are so much advanced nowadays that it is not very difficult to target people. Like you see, what happens is that you could run a social media ad, Facebook ad, and you could target people using the different type of methods, uh, using the different approaches, using the different things. You could just do that. You could target them using the interest. You could target them using the locations. You could target them using the gender. You could target them to the different levels. I mean, like it could be done using the different levels. So let me just guide you that what a big data is. So when we talk about the concept of big data, the big data is the information which is overall available on the web and which is a raw data, which is the raw information which is available. That's what big data is. And you, if you want to use the big data, if you want to use the data which is available on the web, what you got to do is that you got to process that data. Um, for the big data, what is actually going to happen is that what you got to do is that you got to process that data, you got to convert that data into a meaningful picture, into a meaningful thing. So this is something that you got to think about the big data. Now, so let's just talk about it. Let's just talk about it here. It says, finally, the CEO has already identified one important reason for poor performance, and that is failure to use of big data in relation to Shivan's web sales. She believes that the board does not understand the implications of the volume, velocity, and the variety of this data for the business and wants you to write a guide for them. She is aware that this is a new and rapidly developing area for most business, so she considered that board should be briefed about its risks and challenges. CEO wants a report which she can present to the board. Now, so here the examiner has actually asked us to comment about uh, the volume, velocity, and information is big data. Now, instead of writing down long things, I would just actually write down um, a general explanation of what a big data is, right? And I would just write down some of the pointers so that you people know that what exactly is it, and then we could just take it up from there. So what is big data? Big data is the information available through the use of technology, use of websites, browsing, social media, etc. etc. The three terminologies include volume, which is the amount of data that is available, and the different sources from which they can be captured. The velocity, the speed at which data is made available, and how the data should be processed and acted upon. The variety is the different type of information that can be generated from the data. Now, let me just give you a bit of an idea. Let me just give you a bit of an idea. I can just elaborate it also, but let me give you a bit of it. You would have seen this thing that you visit a website of a company, and a bit later you would start seeing the advertisement of that company. This is basically an algorithm which is basically a Facebook pixel. At times the websites, they've got a Facebook pixel which is actually included there. So what it does is that it actually captures the information and the detail of the person who visited your website, and then it targets those customers. Number two, you would have at times seen that you visit the website of a book publisher, and you would start seeing the ads from another website of the book publisher. That's basically customer similarities. You would have actually seen that you might have browsed through your social media, and you would have seen through something on the news channel, okay, some small news piece from the news channel. You would have watched it, and then later on what you would do is that your Facebook watch would keep on suggesting the different news channel, would keep on suggesting different current issues things. What is all of this? This is all something that the volume of data that is being made available, which is the interest, the type of websites you want to see, the type of friends that you have, the type of interest that you have, the type of products you are interested in, the type of offers that you are interested in, that is something what it is. Velocity. Velocity is the speed at which this data is generated and the speed at which the organization needs to react to make this data meaningful. Now, let me give you an idea. Okay. I don't know if my voice is breaking up, or is it just with Shanna, or is it actually with everyone? Okay, thanks. Now, you see the velocity is, now let me just give you a bit of an example. Assume that this is 2nd of June today, and you haven't studied a single word for APM. And you are looking for a tutor, and you contact Escribir Academy. And when you contact Escribir Academy, you don't get an immediate response from them. Like maybe it's an off hour right now. You don't get any response from any customer care representative or anyone. What are you gonna do? You're gonna say that, oh, I just got over from the work and I've just got my leaves. So I need to study and I've not studied. I need some resource. I need some tutor. I need some data. What are you gonna do? You're not gonna just go on to search APM tutors and you would find X, Y, Z, and you would go on to talk to them. And if you get onto a specific response from a specific institution, you might get enrolled over there. Maybe you might not have wanted to get enrolled there. You might have wanted to get enrolled with me, Luqman Rafiq, but you might have enrolled somewhere else. Why? Because the speed at which your information is generated, the speed at which your interest is created, our organization was not able to respond at the same speed to you. So this is going to have an adverse impact on our organization. And lastly, variety of data. Think of a supermarket. A supermarket could think of, or you see this retail store, it could actually have a data of the customer. This customer bought something uh, related to age group of 20 to 25. He bought a gift for his girlfriend. He bought something for some kids, don't know whose kids are they. And this guy always buys whenever there is a promotion. This guy never buys whenever there is a promotion. This guy always buys at the night time. This guy always buys at the morning time. So there is an ample amount of data. There is a variety of data. He's interested in more of a t-shirts. He's interested in a polo shirts. He's interested in jeans. He's interested in faded jeans, etc. There could be different type of customer information that could be there. So basically what would happen is that When we talk about the big data is the ample amount of data that could be generated through the use of technology, through the use of websites. This is what a big data is. And when we talk about big data, so the data has got volume, that is the amount of data is too much, the velocity, the speed at which data is generated, and the variety, the difference, the type of the data that you actually get. Now, what next is there? What are the risks and what are the challenges? Risk could be misuse of data, high cost related to hardwares and software if you want to use the big data. There could be high cost related to the big data. There could be misuse of data. The competitors can outspend you. Let's talk about the challenges. So when I talk about the challenges, what is it that we are going to do? We're going to say that challenges is that what could be the challenges that you can think of? Or at times what happens is that both risk and challenges are more or less the same thing. So it's always safe to actually mix them up so that you can write more. Misuse of data, high cost related to software, competitors can outspend, need experts to implement it, fast systems needed for processing data. If interpreted wrongly, can lead to losses as marketing campaigns would be wasted. Yeah, the accuracy of data is also there. So these could be the different risks and challenges. Again, you're going to write down in the form of short paragraphs with the pointers being incorporated there. You're not going to write down like a very, very big one. You got to write down in the form of short paragraphs. Okay, yeah, do you get it? So this was basically the question number 1 of this March-June 2018 examination, Shivan stores. It's not an old paper. It's one of those papers that had been examined in the past. And in case if you had not attempted this question earlier, so you now had the chance to attempt this question. So we have now completed this question, and in case if any one of you has got any questions related to this, let me know so that I can answer. So I'll move. Yeah, Sotarsana, it's okay. You can do it that way. Now let's move on and let's start discussing the other aspects of the syllabus. So there is this next question that we have. Okay, we can have 10 minutes. Yeah, sure. Okay, guys, we are having a 15-minute break, not 10 minutes. We're having 15 minutes break. We're going to continue in 15 minutes time. Okay, so welcome back, guys. Let's just start off. I have in front of me one of the questions, and that question is about value-based management. So what I'll do is that I'll just discuss about the question, and this question would also include the calculation of the economic value added. I bet the question would also calculate the include the value of economic value added calculation. Now, it's a question named Bazil Company. Bazil hires out plant and machinery to small firms working in the construction industry. Bezil senior managers include the chief executive officer, have worked in the business since it was established 30 years ago, and they own the majority of the shares. So the senior managers, including the chief executive officer, they worked in the business since it was established 30 years ago. During that time, Bezil has acquired many small plant hire businesses. Of these business units, those who have underperformed after acquisition have either been sold or restructured. For example, to increase their operating margins. Bezil has recently diversified by hiring out large items of plant to large construction firms working on major infrastructural projects. These projects can last up to 10 years. Strong growth in the general economy has increased the number of these large projects and has also led to a predicted large increase in bank interest rates. So basically what has happened is in your case, if the interest rates are increasing, the rentals would also increase. I repeat, in your case, if the interest rates are increasing, the rentals are also increasing. Now, let's have a discussion on that. It says evaluate whether a value-based management approach is appropriate for Bezil. Explain to the CEO what changes Bezil would need to make to its performance measurement and performance management system if it were to adopt a value-based management approach. Just wait a bit, please. Now, so it says explain to CEO what changes Bezil would need to make to its performance measurement and performance management system if it were to adopt the value-based management approach. Using information, advise CEO whether Bezil has generated economic value for its shareholders. So basically this part is the economic value added. Now, let me just guide you people what a value-based management approach is. So if we talk about the question, the name of which is Bezil Company, let's talk what a value-based management is. So when we actually talk about the value-based management, try to understand. Value-based management is a technique that focuses upon value creation for the shareholders. Value is said to be created when the company generates returns over and above the returns desired by the providers of finance. The concept of value could be identified from the net present value technique, where a positive NPV means that present values of the cash inflows are in excess of the present values of the cash outflows. Similarly, for the value-based management, different type of value are determined, but the overall concept is to exceed the return desired by the providers of finance. When you would go on to the question, it's the same attempt. Now, furthermore, while implementing value-based management in an organization, the staff at all levels of the organization are so I repeat, while implementing the value-based management in an organization, the staff at all levels of the organization are being directed to focus upon the value creation and to adapt activities which lead to enhancement of the value, whether that be through non-financial activities like customer satisfaction or through financial indicators. I've just explained a general value-based management. I've not related it to the scenario yet. I'm going to do it right now once I read through the scenario. So, but I have actually just given you a bit of an idea. So now let's just see. What is actually happening over here is that Bezel hires out plant and machinery. During that time, Bezel has acquired many small business. Of the business units which have underperformed after acquisition, they've either been sold or restructured. For example, to increase operating profit margins, Bezel has recently diversified, so on and so on. A strong growth in general economy has increased these large projects and has also led to a predicted large increase. The shareholders' objective is to maintain historic return on capital employed. Managers at business units are given objective of maintaining net profit margins of their own business units. Similarly, managers at individual branches are given the same objective according to their areas of responsibility. Following 2 years of performance, it's been suggested to CEO that Bezel would benefit from adopting a value-based management approach. Now, you see, the requirement was you got to evaluate whether value-based management is appropriate. Now, the present method of evaluating the performance is to calculate the ROCE at the organizational level and the net profit margins at the branch levels. The ROCE is impacted by several non-cash items and also by different accounting treatments that may apply to an entity. The use of net profit may not always lead to increase in the value, as the increase in the interest rates in the market would indicate an increase in the cost of capital of the business too. Hence, the introduction of value-based management would reflect the overall value created for the shareholders. I repeat, hence the introduction of the value-based management would reflect the overall value that is being created for the shareholders. So introduction of value-based management would reflect the overall value created for the shareholders, which would be a better measure as compared to using net profit or ROCE. So you to get it, what did I do? I explained value-based management and then I connected it to scenario that look, you are using the net profit margin, you're using the return on capital employed. These may not be the appropriate measures. Okay, I've just zoomed out more so you could see. Now, let's move a bit forward and let's discuss further. What next is there? Then it says explain to CEO what changes Basil would need to make to its performance measurement and measurement management system. Now, following 2 years of poor performance, it's been suggested that Basil would benefit from adopting a value-based management approach. CEO requires your advice and has said shareholders are unsure what ABM is, whether it will benefit Basil and what changes business would need to make if it were to adopt it. All managers in the business are already clear what their objectives are. For example, one business manager recently postponed some expensive staff training on improving customer satisfaction. Okay, which I believe was a correct decision. Our recent performance has meant we cannot afford this sort of expenditure, especially as we have no information on what levels of customer satisfaction actually are. Personally, I dislike the change, but would not object to adoption of WVBM if it was thought to be beneficial. Shareholders have heard that EVA can be used to measure whether Basel has created or destroyed value, but this has not yet been calculated. Now, so what changes are you going to actually introduce? So basically, the first thing is performance measurement and performance management system. Now try to understand this thing. Basically, what are you going to do? You're going to say, I'm just going to write down few pointers. Use of ROC and net profit would be stopped. EVA would be used as a performance measure. The staff is okay. All activities which could create value for the shareholders will be allowed to be undertaken. The expenditure like trainings for customer satisfaction are encouraged as they are capitalized in the EVA calculations rather than being expensed out. The branch managers would focus on all aspects, whether financial or non-financial, which could lead to value creation. Now, how it would impact performance management system. So you see what happens is that the information captured would need to be amended. System would now include both financial and non-financial information. It would be encouraged to relate the actions, to relate how the actions taken by the organization lead to value creation. So your performance management system is actually going to change like this. Okay, measurement system is how performance is being measured. Performance management system is basically how or what aspect are presently being considered the activities which create value for shareholders would be encouraged. That's what you're going to write. Now, let's move a bit forward and let's discuss further. There's this last requirement to the question, that is using the information in the appendix, calculate the economic value added. This is the relevant information for the computation of economic value added. Let's try to do that. Let's try to calculate. Okay, so when you talk about the economic value added, EVA is basically NOPAT minus WACC into capital employed. Now, how would we go about doing the things over here? So I'm going to write down NOPAT. I'm going to say capital employed. It says net profit after tax is 10 million. The capital employed at the start of the year. The opening capital is 250 million. It says interest charge for the year was 15 million on variable rate loan with an interest rate of 10%. Basil is funded 60% by debt and 40% by equity. The cost of equity is 12% and so on and so on. Now, if I try to calculate the WACC here, I would say KE, I would say E, I would say KD, 1 minus T, and I would say D. So KE, the interest charge for the year was 15 million on a variable rate loan with an interest rate of 10%. $15 million divided by 10%. So that means debt is 150. You would say, how? He has given me interest. Basil is funded 60% by debt, 40% by equity. Cost of equity is 12%. And they pay tax at the rate of 20%. So equivalent to 10% minus, multiply 1 minus 0.2. So you've got 8% as what it is. I'm just compiling the information. The depreciation charge for the non-current asset for the year was, okay, we need to add back after tax interest, which is basically 15 million multiplied by 1 minus 0.2. Or you could say 1 minus 20%. So after tax interest needs to be added back. Depreciation charge for the year was 6 million. The economic depreciation, which was 14 million. Okay, so accounting depreciation needs to be added back, which was 6 million. The economic depreciation needs to be deducted, which was 14 million. At the start of the period, the accumulated economic depreciation of non-current asset exceeded its accounting depreciation by 16 million. The economic depreciation for past years, 16 million needs to be added up here. In fact, it needs to be deducted. Okay, just hold on a bit. Okay, now what else is there? The next situation is, it says brought forward at the start of the year was a provision of 4.8 million, which was made in respect of a debt owed by a customer who has since repaid it. Within the current profit and loss, there is an expense of 0.6 million for advertising in trade magazine. This led to several inquiries from new customers involved in large infrastructure, which has resulted in Basil signing at least 2 large contracts after the end of the accounting period. Advertising cost 0.6 million. Now, what actually happens is that you would have this NOPAT. This is what the capital employed is going to be. And when we talk about the computation of WACC, the WACC is going to be 12% into 40% plus 8% into 60%, 9.6%. So if you are to calculate the economic value added, it is actually going to be the NOPAT minus WACC into capital employed. So the economic value added is 8.3248. Now, let me just take you people through each and every of the adjustment that we have actually discussed till now. Now, let me know, are you people okay with this 10 million, 12 million? If there is anything from the NOPAT that you don't understand, let me know. Yeah, I repeat, if there is anything from the NOPAT that you don't understand, let me know. Okay, Aditya, you're saying I did not understand last part. Point 4, Kishan, you're saying that economic depreciation in capital employed. Okay, Janani, Sekar, You're saying capital employed calculation in general. Can you explain for EVA? Okay. Now let me take you people through this, that what exactly is going to happen. Now let's just start off. Let me explain. Basically, when we talk about the economic value added, so you got to understand that what is this NOPAT going to be? And what is this capital employed going to be? The NOPAT is for the year. The capital employed is at the beginning of the year. I repeat, NOPAT is for the year. The capital employed is at the beginning of the year. Now let's have a discussion. So when we talk about the NOPAT, we could start off with a profit after tax and we add back after tax interest to it. This is simply interest multiplied 1 minus t. Now, why do we add up after tax interest to it? Try to understand this. When we say adding up after tax interest, this would actually mean what? The concept of after tax interest is basically because what we are doing is that we are already deducting this VAT from here. So this PAT already is calculated like this: PBIT minus interest, then PBT, and then tax, and then PAT, right? So this means this is already after interest. I bet this is already after interest, right? So we just need to add back the interest because we are saying that this is where we are going to deduct the cost of interest. The WACC into capital employed is a deemed cost of finance, is a deemed cost of interest. So therefore we add it up. Then whatever accounting depreciation that we have deducted, we add back. Whatever the economic depreciation is, we deduct that. Now, if there is a, let's say, marketing expense, advertising expense, that is gonna actually give you benefit for the long term, you add it back. Why do you add it back? Because in accounting, the IAS 38 does not allows us to capitalize the marketing expense. But when it comes to the EVA says that, look, you are getting benefit in the future of this. I bet what does EVA says? EVA says you're getting the benefit of it in the future. So what should you do? You should actually um, you should actually add it back. So that's what happens with respect to NOPAT. Now, for example, if I'm calculating EVA for the year ended 31st December 2022, so I need capital for 1st January 22. So I need capital for 1st January 22. All that adjustments that need to be made are to be up till this date. Now, what is actually going to happen? I'm using the current year's opening capital employed and assume that from the day 1 till now, the accounting depreciation has been charged is, let's say, 200 million. So you will add back accounting depreciation because we are saying that we don't accept accounting depreciation. So if the assets have been reduced by 200, we need to add it back. But at the same time, the economic depreciation from day 1 till now, let's say if it is 250, it needs to be deducted. So hence, if the economic depreciation exceeds accounting depreciation by 50, you need to deduct 50 from it. Do you get it? Now, similarly, what happens is that we use opening capital because we use the start of the year capital. My friend, we use the start of the capital in EVA. We say that what was capital available at the start to generate this NOPAT. Now, similarly, uh, any non-cash expenditure is added back. So similarly, a corresponding adjustment needs to be made here also, which is the non-cash expenses to date. So let's say if we have got the provision, it needs to be added up. Now here, let's try to see something. In this scenario, we had a depreciation here. Brought forward at the start of the year was a provision of 4.8 million. So opening capital employed has been reduced by 4.8. So what did we do? We actually added back 4.8 because we said it's non-cash, needs to be added back. Then it says, which was made in respect of a debt owed by a customer who has since repaid it. Okay, now just wait a bit. Who has since repaid it. Now let me just give you a bit of an idea about it. That what am I going to do about it? That means if the customer repays, it's a bad debt recovered, and the bad debt recovered is an income, right? So bad debt recovered income. It's an income that has been booked. Who has since repaid it. He has actually repaid it. So when the provision of 4.8 million would have been reduced in the current year, you would have recognized the income. So we need to, or you could rather say reduction in provision, because you booked a provision at the start of the year and now you reverse the provision. The reversal of provision would have been recognized as an income. If somebody doesn't understand, let's just see. Let's say 2021, you said expense debit by 4.8. You said provision credit by 4.8. Now in 2022, the cash is debit by 4.8. Receivable is credit by 4.8. The provision is debit by 4.8. And income is credit by 4.8. Do you understand? So it's an income that has been recognized in the current year in the P&L and it needs to be adjusted. Do you get it now? No. Aditya, try to understand. The money, it was not a bad debt that was recorded. It was a provision that was recorded. See, I've actually created an entry. Let's say it was 2021. You created this entry, expense debit, provision credit. Now in 2022, you recovered the amount. So you pass this entry, cash debit, receivable credit, and then provision debit, income credit. Do you get it now? Okay, my friend Aditya, there is something that you need to understand. I think that it's basically a problem with the accounting. Now, tell me, what have you recognized in your P&L? You have recognized an income of 4.8. Is there a cash flow attached to this income? Have you actually earned this income? Okay. So we only include cash flows in the calculation. This profit had an income of 4.8. We need to remove it. Okay, lovely. Is there anyone else having any other questions on this, please? Yeah, is there anyone else having any other questions, please? Yeah, Janani, you have identified perfectly well that for the capital employed, we only consider those adjustments which pertain to previous period. Aditya, under capital employed, it's not the current period adjustment that needs to be made. We are adjusting opening capital, so it's the prior period adjustments that need to be made. Okay, lovely. So we are done with this question, and now the answer that we have got with respect to economic value added is 13 million negative. Is 13 million negative. So what was the requirement of the question? It says whether they have generated value for shareholders. The answer is no. Refer to the spreadsheet suggesting that the EVA is negative 13.1, which means that value has not been created for the shareholders. Okay, so we are done with this question also, the name of which was Bazil Company. Now, what I'm gonna do now is that I'm gonna be taking questions from you people one by one. And if there are any topics or any suggestions that I could actually make. Okay, there is a question that about, okay, are you people able to see my video or are you not able to see my video? Yeah, are you able to see my video, please? No, I'm asking about video. Can you see the video on the screen along with the screen? No. What does it say? What does it say? It's blank. Well, it's surprising. Is it visible now? Is it visible now? Okay, lovely. I think probably it's an internet transmission from my side. That was probably an issue. Anyways, I had some questions. Somebody was actually saying the question. Why did we remove the reduction in provisions on NOPAT since it was from the previous years? Should it only go to capital? Okay, now Oli Chu Kalu, there are things that you need to understand with respect to this, my friend. First of all, last year there was a provision. So that means the opening capital employed has got a non-cash provision. Just remove that. Now let's move forward. The next situation is that there is a reduction in provision that has happened in current year, due to which we would have recognized income. So we have removed that income. So this adjustment is for last year. And this adjustment is for current year. Okay, lovely. So guys, what I'm going to do now is that I'm going to open up the questions. I would actually start taking questions from you people. Like you could just ask any questions that you have, any problems that you are facing, or anything that is actually bothering you. You could just have a discussion and we could just go on answering. Now, there are few things which are the common questions, and which are the common questions is that a lot of students ask that will we get the recording? I said at the start of the class, yes, you will get the recording. The second thing is that is there a WhatsApp group? Yes, there is going to be a WhatsApp group for the revision marathon. It will be made available probably tonight or maybe by tomorrow. Okay, the third thing is that are there any other contents that you're going to give? Yes, I'll give some more content. I will let you know as we progress with the question and answer session. So I'm going to start off, and I can start off with Aditya. Aditya, in case if you have got any questions, anything that you would like to comment, anything that you would like to say, you're most welcome to go ahead, please.
Hi, sir. First of all, how are you?
I am good, Alhamdulillah.
Yes. Great to attend the session today. Sir, I have one question. Can you please briefly explain operational gearing? Operational gearing.
Okay, operational gearing actually is a measure of business risk. Now you see, when you are running a business, if you have got high fixed costs, so you could always run into losses in case if your revenues fall a bit. Let's say if you have a contribution margin of 30%. So that means for every $100 of sale, you would generate $30. That $30 would actually be covering up your fixed cost. And compare a competitor who has got $100 sale and a 50% contribution margin. That means for every $100, he's generating $50 to actually cover up his fixed cost, right? You get this point? Now,
Yeah.
so operational gearing could be calculated using different formula. What are those different formula? It could simply be fixed cost as a percentage of fixed cost compared to contribution. It could be the operating profit divided by the fixed cost. So there could be multiple formulas of doing that, but the operational gearing actually tells you that what's the business risk, what is the risk of the business going towards the failure in case if something goes wrong.
All right. All right. Great, sir. Great.
Anything else that you would like to ask?
I'm just reviewing the question, sir. I will just ask you shortly.
Okay, no worries. We can move on to the next person. We've got Aisha Mofumbira. Yeah, how are you?
Hi, I'm good, thank you. I think for me, I was just going to ask about target costing. Like if you could maybe like give or use an example or something of how it could be asked in a question in the exam.
Okay, you want to know what target costing is, right? That's what you want to know?
Yes, please.
Okay. So see, what happens is that when we talk about the target costing, the concept of target costing is that whenever you introduce a product, so generally the first thing that you do with respect to introducing a product is that you do market research. And from the market research, you identify the selling price of your product. Let's say it turns out that you can sell the product at 100. Now what happens is that you say that my desired margin is 30%. That means $30 is your desired margin. So this is actually gonna be your target cost is $70. Let's say if the actual cost turns out to be $82, so this $12 is the cost gap. And as an organization, what you would like to do is that you try to reduce this gap through the different techniques. How would you reduce this gap? You would try to actually say that what is this gap made up of? Probably material cost, probably labor cost, probably overheads cost. So material, you could go for alternate material. You could go for bulk purchase discounts. You could go for suppliers who are actually different. With respect to labor, you could just train the labor. With respect to overhead, you could redesign the product. You could actually improve machinery. And there is another concept that is there in the target costing to reduce the cost gap is to do value engineering. What does value engineering means? It's actually like you got to, when it comes to value engineering, it's actually like this. That you identify the features of the product into value adding and into non-value adding. The value adding features are retained, non-value adding features are eliminated. So ultimately you could reduce the cost gap. Is it okay to you now? Yeah, is it okay to you?
Yeah, thank you.
Any other query that you have? Which country are you from?
I live in London.
Okay. And you're originally from?
Uganda.
Okay. Lovely. So, I now have Christine. Christine, how are you?
I'm good, sir. Thanks.
Okay. So any comments, any questions, anything?
For value for money, can you guide me as to how do you work out a measure per se for the efficiency? So okay. I know it's the relationship between the input and the output. But if I was to write a measure, I'm having a little difficulty in how do I place what is the numerator compared to the denominator.
Okay. So now when we talk about the value for money, the value for money is achieving 3 E's, which is economy, efficiency, and effectiveness. Now, let's say if I talk about a hospital, I would say that economy is what? Cost per patient. Now, what is efficiency? Number of patients per hour. Number of patients examined per hour. Number of patients per doctor, because doctor is also a resource. The time is a resource, the doctor is a resource. So what you got to do is that you got to use the resources in the best possible manner. So if you are able to test more patients by a single doctor, that's efficiency. If you are able to have more patients examined per hour, that's efficiency. Do you get it now? Is there any other question that you have, lady?
Not right now. I will look again and to see, and I'll get back in touch with you.
Okay. I've got Dixana. Yeah, I've got Dixana. You have any questions, any queries? Okay. Kishan, just wait a bit. I'm just gonna guide you. Don't worry about it. Okay, I've got Edwin Major. Edwin Major, can you unmute yourself, or you would like to chat? Okay, I've got Emika N. Emika N. Okay, I've got Eunice Mukwada. Eunice, how are you? Okay. This is Hasliza Sapik. Yeah, Hasliza Sapik. Yeah, hello. You're unmuted, but we are unable to hear you. Yeah, you're unmuted, but we are unable to hear you.
Hello?
Yeah, we can hear you now.
Okay, okay, sorry.
Which country are you from?
I'm from Malaysia.
Are you from Malaysia? So
Yeah.
I think it's it's past midnight right now in Malaysia, right?
Yeah, 1 a.m. now.
Anyways, I mean, like at times one has to compromise for the purpose of studying, so that's okay. No. So
Okay.
any comments, any queries, any questions that you would like to make?
Oh, I just was about the question about the Eva, where is the about the capital employed adjustment. I'm confused about how to do the adjustment to capital employed. I mean, there's some adjustment regarding about the opening capital employed. And other question is, I noticed some in the revision key question, some of the question they use the average capital employed instead of only the opening capital employed. So how exactly we want to calculate this capital employed in the EVA calculation?
Okay. Now, one thing that I want to tell you is that it always has to be the opening capital employed. It is going to be adjusted, but it has to be opening capital employed. Now, what I could actually tell you is that, let me just guide you. I'm actually going to share that with you people in the WhatsApp group also. I think this is the first time that you have attended any of my sessions, right? Okay, let me just guide you a bit. And to everyone here, you could go on to the Escribir Academy's YouTube channel. And here you could just click on to the playlist. We would share these playlists in the WhatsApp groups also. You can click sort by latest video added. And here what you would do is that you would find a complete playlist for APM. If I go about this full playlist, it has introduction to APM. It has got performance measurement hierarchy, financial performance indicator, critical success factor, balance scorecard, service oriented, building block. Then the past webinars that I've conducted. Then there is this economic value added, a complete video. You could just go about discuss. You could just go about going through it, and you would be able to get a detailed idea as to how it has to be covered up. So I would share the link to the playlist also, but you know that it's Escribir Academy that you got to go to, and you'll be able to see. Right? Yeah. Is there any other question that you have?
Yeah. Other thing is about the MPV. Is there any chances that it's going to might be ACCA during the exam?
Sorry, can you repeat?
About the net present value, is there any chances it's gonna be asked during the APM exam?
No, negligible chances. Even if it's gonna be examined, it's gonna be very, very basic. Very, very basic. And the playlist that I just referred you, it has got an NPV calculation also when you would look at financial performance indicator.
Okay, thank you, sir.
Okay, thank you. Okay, I have got Janani Sekar.
Hi, sir.
Hi, you're from India?
Yes, sir.
Which city in India?
Chennai.
Oh, you're from Chennai.
Yeah.
Okay, so any comments, any questions, any queries that you have?
Yes, sir. So first question is regarding the Minimax, Maximax. I'm facing difficulty in creating the table. So is there anything that I can follow to correctly prepare the table for that?
Okay. Okay, let me just guide you. My request to you is that don't mute yourself. Just stay unmute so that you could be with me when I'm asking the questions. Now see, what happens is that Maximax, Minimax, generally there is a factor which is controllable. And then there is a factor which is non-controllable, which we also call dependent variable. Let's say the marketing expenditure is controllable.
Okay.
The sales driving out of it is non-controllable. Now, so I generally, when I actually do it, is that I go about plotting the horizontal axis. I go about plotting the controllable variable. Like maybe, or you could say that this is something that you have to decide about. You have to decide about that, whether you would go for low marketing, high marketing, etc. So assume that you are in a situation where you have to decide between low marketing, medium marketing, and high marketing. And let's say that the outcome that you would get is 1,000 unit sales, 3,000 unit sale, 7,000 unit sale, etc. etc. Now, so that's one thing. Now what happens is that, let's say this is 1,000, this is 2,500, this is negative 3,000. Let's say this is 2,500, this is 2,000, and this is 5,000. Let's say this is 7,000. This is 3,000. And the third one of them is, let's say it's 4,000. Just wait a bit, please. Just wait a bit. Okay, now see. So what actually happens is that this is a payoff matrix that you have got. When you have got this payoff matrix, if you try to apply maximax to it, so you'd say one of the decision was low, one of them was medium, the other one of them was high. Maximax means you have to identify the maximum values from all. And then you have to choose the one which maximizes the maximum payoff. So it's actually maximize maximum payoff, number one. Number two is maximin. Maximin is, first of all, you go for minimum value. So low, medium, high. The low marketing minimum value is what?
Minus 3,000.
Is minus 3,000. Great. For the medium marketing, it's 2,000.
2,000.
For the high marketing, it's
3,000.
3,000. So you got to maximize the minimum value. Which one is maximizing minimum value?
3,000. Okay.
3,000. Right? Now, last area, which is minimax regret. I've just copied this table so that it can actually be there in front of me as a reference point. Now, when you would go about with the minimax regret, it's low, medium, high. 1,000, 3,000, 7,000. Now, what happens with respect to minimax regret is that you look horizontally. That in case if the demand was 1,000 units, what would have been the maximum profit I could have earned? 7,000.
7,000.
But I chose low marketing. So 7,000 minus 1,000, I regret 6,000 because I only ended up earning 1,000. I could have ended up earning 7,000. You get this point?
Yes,
This
sir.
is regret. This is regret. 7,000 minus 2,500, 4,500. 7,000 minus 7,000 is 0.
Okay.
Then you go this way and see what's the maximum value. It's 3,000 here. So 3,000 minus 2,500 gives you 500, 1,000 and then 0. Then what's the maximum value here? It's 5,000. 5,000 is what you could have earned, but you lost 3,000. So 5,000 is what you did not earn. 3,000 is additional what you lost. So there is a regret of 8,000. Here it's 0. Here it's 1,000. Now, always remember, there are two aspects to this minimax, maximax, etc. This is first part. This is second part. So what happens is that you do second, then first. Like if you want to remember that, what am I going to do with minimax? So I'm saying that there are two parts to these things. Do max first, then minimum first. So you got to identify the maximum regret from it. It's 8,000. You got to identify maximum regret from it, 4,500. Maximum regret from it, 1,000. Then you got to minimize the maximum regret, which is this.
Okay.
Okay, you get it? Now, you'll get the recordings for it, don't worry. One more thing. Come back to this one, maxi-max. Again, there were two things that you were supposed to do. This is first part. This is second part. So second part is maximum. You identify maximum values. Then first part was also maximum. So you chose maximum out of maximum. Here, it's maximum. So this is first part. This is second part. Second part is minimum. So first thing that you do is identify minimum. Then you go for maximum. So always do the second part first, then do first part.
Okay. Okay, sir. Yeah. Now I get it. It's so clear.
Okay. Now, any other questions that you have?
Yes, sir. So is there any important technical articles or important topics that we need to revise before exam that you suggest?
Okay. How far have you studied the APM?
Almost covered all the chapters, but still going on with the practice.
Okay. Did you see the playlist that I showed you?
Yes, sir. I saw a few.
Okay.
I was just going through your past paper, like practice to pass things.
So I think that in case if you can actually refer to them, they are good enough because I have actually covered up the examination questions and I've explained them in quite a lot of details.
Okay.
So I think you covered them up. The rest is basically, there is also a video on that. And that video is actually about, if you could just see, let me just show you. There's a video in the end, which is about revision of, I mean, there had to be second part, but I could not make it. I just made one part. Just wait a bit.
If you are an avid mind mapper, then MindMeister is for you. Create a mind.
Okay, just wait. Now see, if you would look at this video has got different chapters. It includes a strategic management accounting.
Okay.
Includes benchmarking, SWOT analysis. It's a quick revision video for you.
Okay.
So like you could just jump on to the relevant thing you wish to go for. Right?
Sure, sir. Sure. So will there be a second part that will be uploaded soon?
Well, it just depends upon me getting time,
Okay.
which I have not been getting for the last 3 months, unfortunately, but I just plan to do it.
Okay.
Hopefully, inshallah, I do plan to do it. Let's see and let's hope that I'm able to do it. I mean, like, because there is still amount of time available for this. Okay, Olicha, Kalu, yes, I can go to the regret metrics table. Okay, so is there anything else that you have to ask or say?
No, sir. That's it from my end.
Okay, lovely. Thank you very much.
Thank you. Thank you so much.
Thank you. Thank you. Okay, I've got Janelle. Janelle, how are you? I'm sorry, guys. I just was feeling very, very hungry. So I'm just having some food alongside asking and taking your queries. So Janelle, how are you?
Hi, sir. Good afternoon. I'm fine, thank you.
Which country are you from?
Guyana.
Are you from Guyana? Okay. So let me know that what queries do you have?
I have the Argentines A score and Almond Z score. I was having some problems with those.
What's the problem that you're having?
I had some problems with the almond score in terms of like how to calculate. I know the formula is simple, but I was having some problems understanding like how you get the information to do the calculation.
Okay. Now, for this, I would suggest that, see, you don't have to do the calculate. You don't have to remember any of the formula, whether that is for the Z score or whether that is for the A score. You don't have to remember any formula. All that you have to do is that you have to just apply the formula in the scenario, and usually the formulas are very, very clearly defined. I would just see if I can actually open up a question and see if there is a formula available in that. I don't have a question in front of me right now, but let me just give you a bit of a guidance that, see, this is not a rocket science. To identify this formula, it's just a it's a simple thing. I mean, like, the examiner would define you what the formula components are. They would give you a spreadsheet. They would even define that what do the scores mean. The values from this to this means this. The values from this to this means this. So they are actually going to tell you that what does this mean.
Yeah.
But yes, with respect to Argentine A score, there are these qualitative aspects where it talks about defects, where it talks about symptoms, where it talks about weaknesses. So the major thing is like a board of directors, which is not very well experienced, which is not diverse. It's about investing too much into a single project, having a high gearing. Um, Furthermore, that there could be the symptoms like uh, deteriorating premises, defaults on the bank loans, etc., things like that. So these are the multiple things that could have an impact. So basically, the Argentine A score is completely theoretical aspects that you got to understand. And for the Z score or any score, R score, K score, Y score, they would give you the formula and you just have to apply the formula. The important thing is you need to understand that the examiner asks a questions that you got to evaluate the model. Now, when you have to evaluate the model, you got to evaluate that model keeping in mind or having in front of you the organizational circumstances and whether the model's assumptions are in line with that. And he would define you in the scenario that whether the model's assumptions are in line with that or not. Let me just tell you one of the questions that you can do. Just wait a bit. Okay, there is a past paper question, the name of which is Zones Company. Zones company. I would recommend you to go through that zones company question. It's a past paper question. The name of the question is zones.
Thank you, sir.
Right? Is there anything else?
No, that's it. The other thing was the minimax regret, and that was already answered. Thank you.
Okay, so that's already asked. Right. Thank you. Thank you. Okay, I've got Josephine Alsop.
Hi, good afternoon.
Hi, how are you?
I'm fine, thanks.
Okay, so how can I help you, lady?
I have been going through your webinars from on YouTube, so I'm pretty okay.
Okay, lovely. So how has been your experience of going through those webinars?
Well, it's pretty understandable. Helped me to understand a few topics a little more better.
Okay, so great. This is good to hear. So all the best with your preparations, lady.
Thank you.
Thank you. Okay, there is this Judith Julian. Yeah, Judith Julian. Okay, I can move on to the next person, Catex Mosea. Catex Mosea. Okay, I've got Kingdom M Kangana Kangamvi. Kingdom M Kang M Kang. Okay, I think Catex has unmuted. Kingdom, I would request you to just wait for a bit. I'm just going to unmute you again. Yeah, Catex, you can speak up. I can't hear you.
Yes.
Yeah, I can hear you a bit, but not clearly. Okay, Kingdom, you can unmute yourself, please.
Hi, sir.
Hi, how are you? You're from South Africa, right?
That's correct, yes. I think from my side, I am getting there. I think the last attempt I got 44. I think I attended some of your classes, and I think I just have to do a little bit more practice, particularly on linking the models, on performance reporting, and secondly, just doing more questions. But I think I'm getting there. No questions. You've already covered EVA. That was my the few questions there. You've also covered transfer pricing. So happy.
Good enough.
Thank you,
Lovely.
sir.
All the best with your preparation, my friend. Thank you. Okay, I've got Kishan Dixon.
Hi, sir. Well, I just wanted to know what we should be doing from now until exam time.
Which country are you from?
Sorry, Trinidad.
Oh, you're from Trinidad. Okay. Now, I think, do you have any other paper to attempt, or is it just the final paper that you have?
In this sitting, I'm only doing this one paper.
Okay. Now, I think there are two things that you can do. You still have got 7-8 days left. So what you could do is that you could do 2-3 things. One of them is practice as many past papers as possible. And when you are writing down the answer to the past papers, don't write down the complete answer, but rather create pointers. Just rather create pointers that what am I going to write down in this question? And when you would look at the examiner's answers, you would get confused. So try to look out for the key points in the examiner's answer in case if you're looking at examiner's answer. But generally, if you would see my videos or my answers, I would have actually kept it quite simple, like a straightforward. It's just that you got to have some thought process going on. So my suggestion is that you have got 6-7 days available. You can spend 4 days into practicing the past papers. Let's say 10-12 past papers questions, plus then you can spend a day for the revision of the whole course and a day to practice all the weak areas that you have. And on the final day, just sleep well and go to the exam without any fear that you're going to end up failing. Because I think that it's the fear of the failure that leads you towards the that actually unfortunately leads to a disastrous situation. But generally, it's not. APM is a very general paper and can be passed easily in case if you apply a bit of a common sense and in case if you just understand what the examiner is trying to say. The biggest problem is that the students, they don't get what the examiner is trying to say. And I think that if you have got time, you should practice the past paper, and you can even refer to the examiner's comments on each of the questions. So you would probably identify that what the mistake that you were making, the examiner has probably identified that mistake for that a lot of students would have made that. So that would also help you improve.
Okay, thanks.
Thank you. Anything else?
No, that was it for me.
Okay, lovely. Thank you. Okay, I've got next Muhammad Yasin. Yasin, anything, any question that you have? Walaikum salam. Any questions?
Just can you repeat
which
once
one
again? And minimax regret.
Okay.
And
your voice is breaking. And what else?
Integrated reporting.
Okay, integrated reporting. Okay. Just wait a bit. Now, you see, when you go for the minimax regret, what is it that you got to do? See, it was a normal payoff matrix that we had, and we created a minimax regret. We created a regret matrix out of it. How did we do it? We had the same low, medium, high, low, medium, high. 1,000 units, 3,000 units, 7,000 units, same here. Now, in minimax regret, what we do is that we think that, let's assume if there were 1,000 units sold, what is the maximum that we could have earned? So we could have earned 7,000. Now what we do is that if we chose low marketing, that means we ended up earning only 1,000. But when 1,000 units were sold, we could have earned 7,000. So that means we have a regret of 6,000 because of choosing this strategy. We could have earned 7,000, but we only earned 1,000. Similarly, when the medium marketing was chosen, we only earned 2,500, but we could have earned 1,000. So 7,000 minus 2,500, this is the regrets. We chose high marketing. We earned 7,000. 7,000 is maximum that could have been earned. So resultingly, it's going to be 0. And this one, I would like you to understand this one. Say if you have got 7,000 units, what is the maximum you could have earned for 7,000? 5,000. You chose low marketing. You in fact lost 3,000. So you regretted 5,000 and then you lost 3,000 more. So end of the day, your total regret is 8,000. Like if 7,000 units was the outcome, and if you would have chosen medium marketing, you would have earned 5,000, but you did not choose medium marketing. You chose low marketing. So resultingly, you lost 3,000. So 5,000 lost plus 3,000 lost, total 8,000 is the regret. Now, once you have prepared this regret matrix, it's mini-max regret. As I explained, there's the second part. This is the first part. So you do the second part first, like maximum. You identify maximum values out of this. Then you choose minimum out of these maximum. So this one. So it's mini-max regret. It's mini-max regret. Is that okay to you?
Hello.
Yeah, is that okay to you?
Yeah, that's clear.
Okay, now let's move on to the integrated reporting. Now, when we talk about the concept of integrated reporting, where did my pen go? I could just give you a bit of an idea, and then what I would do is that just when you are actually talking to me, I just realized that I have got integrated reporting. I think I did teach it in the AAA or somewhere. It's available on the AAA playlist, I guess. So just wait a bit. AAA playlist. Integrated reporting. No, it's not there. Probably in the SBR playlist. Yeah, here you go. Integrated reporting framework. So I'm just adding it to APM. Just wait a bit. Save to playlist. AFM, AAA, SBR. Okay, I've just added this to the APM playlist. Probably you will get it at the end, the integrated reporting. Now, but I would just still explain to you a bit of a concept. What is this integrated reporting? It's actually a framework where what we do is that we say that there are different type of capitals available to the entity. The human resource, the natural resource, the finance, etc., etc. So how best have we used all of this to create value for shareholders? How best we have used it to create value for the shareholders. So the integrated reporting is a framework which actually talks about the different activities that the organization does, the different contributions that the organization does, and how it ultimately leads towards the value creation for the shareholders, how it actually leads to the value in the financial statement. That's what integrated reporting is. So it's actually training the HR, obtaining work from HR, and that is being reflected in financials. How natural resources are used, how they are being transformed, and ultimately they end up creating the value. So this is a framework used for ultimately showing how the organization have created wealth for the shareholders through the different capitals which were at its disposal. Now, what type of question you can get from the integrated reporting? Maximum 6-7 mark question. And that 6-7 mark question would probably be just asking for that what an integrated reporting is, or things like that, that how the integrated reporting helps identify the different parts of the organization, that how do they create value for the company. So that's probably it's going to do. So, but for the time being, what I've done is I've added a playlist. I've added that video to the playlist. You can go about it.
Okay, sir. Thank you.
Okay. Okay, now we have got Mehabo Ejer. I don't know. How do I pronounce your name? Mehabo Ejer. I can't hear you. Okay, Muamba Musukawa. Very low voice, very low voice. Please increase your voice.
Hello?
Yeah,
Hello,
can
can
hear
you
you
get me?
now. Yeah, I
Okay,
can.
all right, thank you, thank you. You've covered most of the areas where I had questions, mostly especially on the EVA. Looking at the past papers, I seem to notice that wherever there is a value-based management, there's always a connection to EVA. Is it something that always is set up like that in all the exam papers? And then
Majority of
also,
the times you get the EVA, and you've got this EVA also when the divisionalization question is being asked.
Okay, all right, okay. That's good to know, just to make the connections. I will try and make use of the playlists and just try to get to grips with everything else. I think my biggest issue is connecting the knowledge to the scenarios. I'm aware I have the knowledge, but every time I try to answer certain questions, I find myself stuck. Like I can't really apply the knowledge. So I'll see how far I can go, especially with the question practice. But your playlists are very much welcome. So I'll get to that. Thank you so much.
Thank you very much. Thank you. Okay, I have got, yeah, Ms. Zuraini, how are you? I can understand it's quite late in Malaysia right now.
Yes, hi, Assalamualaikum.
Walaikum assalam wa rahmatullahi wa barakatuh.
Oh,
Sorry for making you stay awake for so late.
it's okay. Sir, I just want to ask about EMA, Environmental Management Accounting. Can you explain the important thing that I need to know? And do you have any past year question that I can go through for EME?
Okay. For the EMA, the past paper question that I can think of, I think it was examined back in 2018. But a very good question that I can think of, it was back in 2012. I'll just see if I could just share the question and the answer with you people. The WhatsApp group for this marathon would be created by tomorrow. So we'll try to do that. But let me just tell you that what is this environmental management accounting? So basically the environmental management accounting is a technique under which what we do is that we try to identify the environmental impact of organizational activities and how these could be incorporated in the cost. So basically, there are different type of environmental costs that an organization would incur, whether that be the use of natural resource, whether that be the damage to environment, whether that be the cleanup cost, whether that be the reporting cost, because the organizations, they do the sustainability reports also, and those sustainability reports, or let's say the CSR reports, they usually have the entity, they do talk about the entity's contribution towards the society, towards the environment. Now, what actually happens is that the major agenda of using the environmental management accounting is that the environment related cost, the environment related impact of a product are to be incorporated in that cost. And there are different techniques that are used. Number one of them is input output analysis. Like for example, you have got a refinery, 1,000 liter of the petrol, 1,000 liter of crude oil goes in. You have got 300 liter of, let's say, diesel. You have got 500 liters of, you've got 500 liters of petrol. Let's say you've got 100 liters of kerosene. So the remaining 100 liters is going to be either the residual or it is going to be waste. So one of the ways of the environmental management accounting is you use the input output analysis technique to try to identify that what is the residual or what is the waste that have arisen because of our organization's activities. That's the one thing. The second thing is that you could use the activity-based costing. So the different activities that we do, we could just, let's say environment cleanup is an activity. Let's say the site restoration is an activity, etc., etc. So you could just apply the activity-based costing principles to this environmental accounting. Wait a bit. The third one of them is, you could use life cycle costing. What is this life cycle costing? It's basically from the inception to the termination. Whatever the costs that are actually incurred, they're all covered up in the costing of the product. So basically whatever the environmental cost, whether that be the cleanup cost, whether that be the cleanup costs during this, and then that be the site restoration costs, etc., etc. So incorporate all those costs and you report them as part and parcel of the cost of the product. So basically the advantage that you get is the profitability has improves a lot. Plus the second thing is that you are able to see that what are your overall environmental impacts of actually a product. That's what you actually get when it comes to this environmental management accounting. So is it okay? Is it clear to you now, lady?
Yes, sir. Thank you.
Okay. Is there any other question, any other comments that you have?
Last time I did ask you in the WhatsApp, but regarding the how to assess in the divisional performance, performance on divisional versus performance divisional manager.
Okay. Okay. Basically what happens is that if you know the concept of responsibility center. What is a responsibility center? A responsibility center actually could be cost center. It could be a sales center. It could be a profit center. It could be investment center. Like if you have a division which just produces the goods, so that's actually a cost center. If you have a division which just sells the product, you've got a sales center, or we also call it revenue center. If you've got a profit center where the division's manager is responsible for sales, investment center, where you are responsible for profit plus investment. So depending upon your division, that what type of responsibility center is it? So like here, you may go for ROI, you may go for RI, you may go for economic value added. For the profit center, the net profit, the gross profit, etc. For the revenue center, the sales growth. For the cost center, cost per unit, cost variances. These could be the ways of measuring the performances of these different type of divisions, depending upon what type of a responsibility center it is. Is it okay now?
Okay, sir. Understand. Thank you.
You're welcome. Okay, I've got Olichi Kalu. Okay. Patrick Emuti. Patrick Emuti. Okay, Olichi Kalu, what is sustainability? Sustainability is basically, when we talk about sustainability, the concept of sustainability is that you talk about preserving the resources, you talk about operating in such a manner that your damage to the environment is limited, your damage to the environment is restricted. That's what the concept of sustainability is. So when we talk about the sustainability reporting, we are normally talking about that how the organization's activities have an impact on the environment and what are the actions that the organization has taken to prevent those detrimental impacts from taking place in the environment. That's what the sustainability reporting is all about.
Thank you, sir. But I
You're
also
welcome.
asked about transfer pricing. Please could you talk to us on transfer pricing as well? Thank you.
Okay, what is it that you need to know for the transfer pricing?
The different methods and how we can maximize marks in the exam, the approach we need to adopt, in getting the relevant marks in the exam. Thank you.
You're welcome. Now, when we talk about the transfer pricing, the transfer pricing actually refers to the price for goods or services charged within an organization. So the price that you charge for the goods or the services within an organization, that's going to be considered as a transfer price. Now, there are different ways of setting a transfer price. You can set cost-based transfer price. You can have a negotiated transfer price. And you could have a market-based transfer price. What is a cost-based transfer price? There could be different ways that between the divisions, between the department, you could say that we are going to transfer the goods on the basis of variable cost, on the basis of full cost, or on the basis of cost plus. At times what happens is that you've got negotiated. Okay, just wait a bit. Now, then you've got negotiated transfer pricing. What is this negotiated transfer pricing? It's basically you allow both the divisions to negotiate with each other and decide if they wish to purchase at whatever price they wish to purchase. And even if they don't want to purchase, they can purchase from outside. That's what negotiated transfer pricing is. Lastly, market-based pricing is basically what you identify the market value and you say that whatever you're going to trade at the market value. At times we use adjusted market value. What is this adjusted market value? The concept of adjusted market value is that you would say market value minus cost savings from selling internally. Let's say, for example, if you've got a market value of 1,000 and the cost savings by selling internally, maybe the packaging cost save, transportation cost save, commission cost save is, let's say, 70. So 930 is going to be the adjusted market price. Now, what should be the transfer price that should be used? There is an optimal transfer pricing rule, and that optimal transfer pricing rule is that the transfer price should be based on variable cost plus opportunity cost. What is this variable cost? Whatever the cost of production, $10, $20, etc. opportunity cost is the contribution lost for not selling externally. The contribution lost for not selling externally, that's what the opportunity cost is going to be. Is that okay now? Yeah, Max, you have got any question? Okay, Patrick Amoti, do you have any question? Okay, Sutar Sana, do you have any question?
Hello, sir. Yep.
Hello.
Thanks for the good session over there. Just a very quick question over here. So when I was doing the papers, I saw the model answers, and the model answers seems to be, like really lengthy. And whenever I tried to like type as fast as I could, I still couldn't catch up with the length of the model answer we have. So first, are we expected to write as long as the model answer? And if I happen to make lots of typing mistakes unintentionally, will I be penalized for that? That's one question. And another question is, could you please briefly explain the difference between performance measurement and KPI? Thank you, sir.
Okay. What happens is that the second thing is what is important is number of pointers, the number of points of discussion, not the length of the answer. The third thing is that if there is a typographical error and there is too much error, then you might lose some marks if you are not understandable to the examiner. But if you are understandable to the examiner, some minor additions and amendments are okay. And last question that you asked was about?
The difference between performance measurement and KPI.
Okay. Performance measurement. Now see, performance measures, generally when we talk about the key performance indicators, the KPIs, are usually the ones which are at the strategic level, like aligned with the mission. But the performance measures could be introduced at operational levels also. So it's just that the KPIs are higher level performance measure. That's it. But otherwise, in case if the scenario, if the is the same. But generally, if you would look at performance pyramid model, the ones which are measuring customer satisfaction, flexibility, and productivity, they are performance indicators. And the ones which are measuring delivery, quality, cycle time, and waste, they are performance measures. So indicators are higher level, interchangeably used. Do you get it?
All right, sir. Yep, I get it. Thank you so much.
Any other questions? Any other?
No, sir. I'm fine. Thank you.
Okay, lovely. Okay, I've got Titi Layo Tayo. I'm sorry if I'm pronouncing your name incorrectly. Titi Layo Tayo.
Hello, sir.
Hello. Which country are you from?
I'm calling from Lagos, Nigeria.
Oh, from Lagos, Nigeria. What does your name mean, Titi Layo Tayo?
Well, Titilayo means my joy is forever.
Titi Layo means rejoice.
My joy
Forever.
is forever.
Oh, lovely. Titi Layo. So I could
Yes.
actually say that I am Teddy Layo. Okay, so how can I help you, lady?
Okay, well, so far you've covered areas where I have challenges with, but can you just probably explain more on activity-based management?
Okay.
Yes, sir.
First of all, activity-based management is use of ABC data to bring improvement. The activity-based management are majorly of two types: operational ABM, strategic ABM. The operational ABM and the strategic ABM may be pertaining to the customer analysis, pertaining to the product analysis. The operational ABM may be pertaining to the activities during production and so on and so forth. So, okay, Mihabo, just wait a bit. I'm just going to come on to it. So when it comes to the activity-based management, it's one of those techniques in which we use the data which is available for the activity-based costing. We use that data to try and identify the unneeded activities, unneeded actions, unneeded tasks, and we try to get rid of them so that we improve. The strategic ABM is that we try to identify the products which are loss making. We try to identify the customers to whom we should not be selling, and we try to get rid of them. So the activity-based management is basically a technique where the activity-based costing data is used to help you improve. Is there any other question that you have?
That will be all for now, sir. Thank you so much.
Lovely, thank you. Okay, William Miller, how are you? Yeah, William Miller. Yvonne Morrison, how are you, lady? Okay, disadvantages of ABM: it's difficult to implement, it's costly to implement, and requires a lot of expertise because it's not everyone's piece of cake to implement it. Yvonne, let me know how much have you practiced this time? Have you prepared this time or not? Okay, no worries, no worries. Okay, I've got one more question, which is Mihabo. You only do as many questions as you can, right? Okay. The cost-centered Okay, now let's just talk about these Hopwood's management style. So when I talk about the Hopwood's management style, what exactly do you mean by this? Hopwood suggested that there are different styles of management. I mean, Hopwood suggested that there are different styles of management. And when we talk about the different styles of management, there is one of them which is called budget constraint. What is this budget constraint style of management? Budget constraint style of management is that where the management is just concerned about being within the budget. They don't want to exceed the budget. They are very much cost conscious. That's what they are. The profit conscious is management won't take risk. They just want to earn the profit figure that is being quoted to them. And the non-accounting style management says that, okay, we want to grow. The customers are our priority. Irrespective of we earn profit or not, we don't care. Budget constraint style is suited for the organizations which are operating in a competitive environment. Profit conscious is also for competitive environment, but again, where focus on profit rather cost. And non-accounting styles is basically where you wanna grow, you wanna achieve growth. You're part of growing industry. That's when you use the non-accounting style. Yeah, thank you very much. Pronounce your name correctly. Ahu Muzu, Ahu Muza, Asim V, Yuvon. Okay, you are asking for 3-4 things, which is league tables, EVA, and lean information. So not going to be repeating right now. For the league tables and for the lean management, I could just suggest you, because you see there are things that are covered in these videos, so I'm not going through them. You will be added to the WhatsApp group. I'm going to suggest one of the videos amongst these have actually got the lean management and also this lean information system. And the third pointer that you have actually asked, which is the league tables. In fact, for the league tables, I would suggest you to go land. For this. Just wait a bit. Yeah, this is lovely. Thank you very much that you asked this question so that I could just add it up to this APM playlist, because this is a question that I've actually covered up in a very much detail, and it's actually going to help you out. Okay. This question has got both the value for money, plus it has got this league tables application also. And with respect to another area where the lean information is discussed, I think this is the, probably this is the video where the lean information has been discussed, something here or here. I'll just let you know. Probably you could just then. Yeah, here you go. Just mark this video. Okay, I'm just gonna share that. Don't worry about it. I'm just gonna share that. Okay, is there anyone else having any other questions, please? Okay, any other comments that anyone would like to have? Okay. For the business process reengineering, let me just give you a bit of a guidance that what is a BPR? The business process reengineering. It says it's a fundamental rethinking, radical redesigning of processes, products, operations, to bring about a large change. So when we talk about this BPR, it's actually the activities that are being undertaken to bring about a large change. Now, what happens is, for example, you are operating in an organization and you've got a method of dealing with the customers. There is a method that you deal with customers, how the new customers are being treated, how the customers are being followed up, how the old customers are being treated, how the customer complaints are being handled. There's a process. But over a period of time, you realize that the customer complaints have gone up a lot and the customers have actually are very disappointed with your company. They are not happy at all. So if you realize that over a period of time, the customers have not been happy, the customers are not happy with your company, they are not uh, they're not actually satisfied with your service and all that. So what you do is that you try to improve your service by improving the customer service, uh, by actually amending the way the customers are actually dealt with, but still you're not able to achieve a big improvement. So what you do is that you scrap the whole customer management process that exists right now. And what you do is that, what you simply do is that you actually go about introducing or designing an altogether new process. And that new process is such that the whole old process is scrapped and you redefine, you redesign the whole project using every single thing that you can think of to bring about an improvement to how the organization goes about. Is that okay? Okay. When we talk about the Mendelow's matrix, what you do is that you identify the stakeholders into 4 categories, which is interest, which is power. Low power, low interest, high interest, high power. Now what happens is, I would rather plot it like this. Now, what actually happens is that when we talk about the stakeholder matrix of Mendelov, what exactly is this Mendelow's stakeholder matrix all about? The concept of stakeholder matrix is that it actually classifies your stakeholders into the 4 categories based on their interest, based on their power, based on their interest and power. Now, so if you've got a stakeholder who has got low interest and has got low power, minimal effort. If the stakeholder has got low interest, but the power is high, you got to keep that person satisfied because that person can do anything. If the stakeholder has got a high interest but low power, you keep them informed. But if they've got high interest and if they've got high power, they are the key player. So generally what happens is that I cannot specifically tell you that what could be the KPI for these. It has to be based on scenario. It has to be based on scenario. Like maybe possible, if your key player in your case is the government and the government wants you to pay taxes, the government wants you to have compliance with laws and regulations. What are you going to do? You're going to say that I would introduce KPI which measure my taxes that I have paid. I would introduce KPIs which measure that the non-compliance of laws and regulation, the number of times that this has actually happened, the number of times that this instance has happened. That's what we are going to do. So I can't specifically say that this is going to be the KPI. It is scenario specific, Mr. Aditya. Yeah, it can be measured. Okay, so anyone else having any other question, please? Yeah, anyone else having any other questions, please? Okay, you're much welcome, Aditya. Thank you very much. Okay, guys. So I think that's it for today. You will be added. You'll be added to the WhatsApp groups. Oli, I just opened up a video on that Six Sigma. I'm just gonna share that immediately in the WhatsApp group. In fact, if you wanna see, this is where the Six Sigma is. Just wait. Amongst the videos which are available, you could go on to this video, day 5 of ACCA Practice to Pass APM for March 2021. You could go on to it and you could see the Six Sigma from this. At the end of it is Six Sigma. So anyways, thank you very much guys for your time. Thank you very much for attending the session. Thank you for all the questions that you asked. I'm sure it has benefited a lot because it's just that it's not just about one person benefiting, it's everyone there benefiting. So I'll let you know, Aditya, to everyone in a day or two. Yeah, Zinzureni, I'll come up with that. So I think guys, thank you very much for your time. Thank you for attending the session. Highly appreciate it. So all the best with your preparations for the APM and wish you all the best. Thanks a lot. Thank you. Thank you, Zinzureni. Thank you, Janani and Hesliza Sapik. Thank you. Christine, thanks.